So, good morning, active traders, and welcome to our Trading Week Ahead broadcast. I'm Ken Calhoun, president of the Original Day Trading University, coming at you live from Colorado. It's how to trade the frickin' sell-off in the market. Be sure to join my crushwallstreet.com promo for the All Access Pass. That gives you over 400 hours of live market webinars, working with me 6 days a week, or as many days as you want of the 6 days a week with live training and much more. If you're not yet a member, do join. The alternative, and that's the $9.97 for the year. The alternative is if you want to be cheap and just start off with the $7 modest investment for the price of a hamburger and a coffee, you too can be a trial member of my live room for 3 weeks for just $7. Do we have a sell-off ahead? Most of my money's in the inverse instruments and cash. Most of my money's I've got cash, but second most is in inverse instruments, and we'll see if they continue to move up like TVIX did yesterday with spectacular range and volatility. I'm up $707 as of this morning or yesterday or whatnot, and mostly in TVIX. It's always all information for educational use only. Learn from me, a real trader. Dun 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 dun. Bye bye bye. I don't think so. I think it's a sell, sell, sell. House of pain market that we're in. Anyway, taking a look at our S&P, you can see we got a bearish engulfing yesterday, which is kind of putting the kibosh on the longs unless earnings come out strong next week and that outweighs the concern about the coronavirus, which is highly doubtful. This market has been a house of cards skating on thin ice. It's just a matter of time before the big beatdown in the stock market occurs, and I think that we have a very high odds chance of that being right now. So that's why I cashed out of most of my Canopy Growth and my other pot stocks yesterday on the drop. Most of my capital is in the inverse instruments. Anyways, take a look at the market. We'll see where it heads. We're likely going to see a gap down on Monday. My question is, what happens after earnings? We've got a very full earnings calendar next week. The biggest earnings calendar from some of the largest cap instruments in the known universe is next week. So it's going to be kind of a battle between whether the earnings valuations catch up or meet the price action that we've seen these rapidly running stocks go the last few months, or if the earnings picture doesn't match up with the price of the underlying, we'll see a big drop, of course, in the stock market. And of course, if the coronavirus fear continues to weigh on the market, we'll see a big drop as well, particularly for travel like airlines, casino, hotel, cruise line stocks are all beaten down yesterday. We'll see if that continues on as well. Options traders, now would be a really smart time to potentially consider buying puts in the S&P for weeklies or monthlies. I think the market's due for a BABD, a big A-word beatdown. We may see a big reversal in the market. So with that, do be ready for it. Do pay attention to the VIX. Being heavily starting to get heavily long in the VIX ETNs. I'm keenly interested to see if the VIX is able to break north of 17, which is a key resistance area on this chart. Even kind of discounting this upper tail here, if it wasn't for that upper tail, which is way up to 18, the main trading range here has been 12 to 15. And it's kind of noisy between 15 and 16. So we want to see if we get north of 16 and hold, then north of 17 and hold. And if we do, look for the closing value in the VIX moving forward. And the close, it's like they say, amateurs control the open and professionals trade the close. That's very valid, which from a big money perspective. Look for shorts in the market, especially if the VIX starts to break over 16, particularly if it gets over 17. And if we get a break over the 18, which is entirely possible, we'll likely see a big drop in the market. Look at the 1 year in the VIX. The previous peak back in August had been way up at 25. And does anyone remember what it was during the big sell-off slightly more than a year ago? It was up to 36. A bearish upper tail there. But anyway, the VIX has been nudging around here in this 12 to 15, 12 to 16 range range bound since late October. And the question on all of us volatility traders' minds is, for swing and day trading, what's the picture of the VIX do as it moves forward? I would expect a gap up in the VIX on Monday and a gap down in the stock market. The question is it sustainable? And what happens, say, after earnings are reported? I think there's only one major company reporting on Monday, but we're getting substantial earnings reports from the largest cap growth tech sector instruments later in the week, Tuesday, Wednesday, and Thursday. So with earnings up to bat, that's part of the puzzle. The other part of the puzzle is trading volatility using the VIX indicator. And if you're day trading, you always use the trend, the ARMS index as well. So despite all that, how about that Tesla? I know one of my traders, Sherry, had asked about this one, and I made some winning calls for it for my live room members last week, just even though I personally don't like to trade $500, $600 now instruments, but Tesla, what a run. It could certainly keep going higher, but the further things run, the more susceptible they are to pullbacks. What I use as a decision support tool is a loss of key support levels on the chart. And on this chart, I would use 550 as the price action. Got a bullish cup there / 3-day support at 550. So right under 550 is where, if you were swing trading or investing in Tesla, a loss of the 550 would be a brilliant place to sell and take profit. We're in a little descending pullback tops here. We're taking out lower highs. So that's like a little bear wedge, descending triangle pattern formed here despite a bullish cup. So my TVIX call would be to short down here, and I would not be interested. I'm not going to buy TVIX up at 600 a share. No, thank you. I think a loss of 550 is a brilliant call for a short Tesla move. Remember I said that in a week or two when it's down here, and oh yeah, he was right. For a little less expensive instrument, we covered this one last week, and it ran up nicely. And a pullback here. We'll see if this uptrend continues. And a small cap runner has been GGB. So those are a few charts you may want to pay attention to there. Of course, not as good as the ones that my Swing Scans members are about to get at the half hour, or that my live room members get 5 days a week. But hey, it's a start, and the kind of charts that make sense in this beatdown market to consider for potential moves up. I'm not going to swing trade any stocks long next week. I think the market's in a precarious, about to sell off thing. So I'm going to be scaling into my strategy for next week, at least in my own. And by the way, I sold my TQQQs a few days ago. I think I'm back in 94 and change, if memory serves. So I didn't ride it all the way up to the 100, but I anticipated a reversal near the 100. And that's, again, just like my whole number or decade value support resistance strategy. You find markets behave in predictable patterns. So selling, remember what I said, always sell nines. When anything has a 9 in it, like TQ's up at 94, that was a good sell. Even if you don't get the exact top, it's a pretty good reversal. All right, Wendy, yeah, Tesla stopped close to the 600-point resistance. Hey, Don, let's see, thoughts on Apple? The best investment grade stock, if you own nothing else in your portfolio, Apple and Amazon would be my 2 picks for if my life depended on me investing for the long term. Apple and Amazon would be the 2 best picks. Still a wonderful chart, right? There's nothing wrong with that chart. It's not doesn't have too much of a range. I mean, the range is moderate, say from 250 to 320. So I got a 70 stick range in this. We do have 3 red candles, but yeah, with earnings up to bat, it wouldn't surprise me to see, like a gap down to here or a gap up to 340. But this is one of those rare instruments I would buy a bounce on a pullback. If the whole market gets dragged down next week, this thing has an earnings miss or whatever, and it crashes and burns or pulls back here and starts to bounce, reinitializing a position in Apple would make sense because it's such a fine investment grade instrument. The valuations are what they call multiple expansion here. We've got an expansion of multiple in our ratios, and the numbers don't particularly add up for a lot of the high-tech growth instruments. So with a bubble that we've had, I would be going to cash on any sign of weakness, any loss of 2 or 3 days support. So if one were long Apple, a loss of 315 would be a really smart place to sell it all. At least that's how I would trade it. Hey, Mark. Good point. Yeah, Mark's saying I normally agree with me because I don't have any opinion on the direction from the headlines. Having said that, I've been paying maybe a little more attention than I should lately. You're right, it's all about price action. But the main thing that I follow is the fact that we've got a bearish engulfing in the S&P. That's candlestick reversal signal. And we've got all these, and it's the biggest red candle in 3 months. So as a price action trader, that's vitally more important to me. I agree with you. The headline news and what the talking heads say are less than unimportant. The main thing is always going to be price, right? So what we want to do is make a decision. Now, as the S&P, let's say the S&P gaps down here and it starts to roll down and then bounces and chops, which is very likely. Now what? Okay, well, what I want you to pay attention to is price action in the S&P relative to the 50 simple moving average line right here in 3210. If we lose that, that's going to flash a sell signal to the world's high frequency trading algos in the dominant computers that run the stock market. So if we lose the 50 SMA, you're going to start to see some cracks in the foundation. Do pay attention to the Russell, the small caps, and your banking and finance sector, and bond yields, right? Those all line up to give you a picture of the market in terms of which way to trade it directionally. I think now would be a really brilliant time to start buying puts in the S&P for the options traders. Weekly put buying is a very intelligent strategy for our current markets. I highly recommend people like Larry McMillan, Price Headley, and Tom Sosnov as the top 3 options experts I've known personally for years, and those 3 guys are all brilliant. So if you're learning options, don't learn from anybody other than those 3 guys. If you learn day trading, don't learn from anyone other than me and Harry Boxer's a rock star. But we're the 2 best of the breakout traders in the industry. If you want to learn candlesticks, learn from nobody other than Steve Nissen at candlecharts.com. We all have our competitors and copycats and all that kind of crap. Learn from those of us who are the original folks who know what we're talking about. Anyway, the point is, moving forward, you want to keep an eye on the S&P to see what it does relative to the 50, 100, and 200 SMA, and obviously want to go short the market on a sustainable drop underneath each of those, and or take profits on open long trades. I disagree with the famous talking head on a financial news show that said, look for weakness. I understand from an investment standpoint, I guess that's the thing. If you're an investor, I understand the case for buying non-China exposure instruments that get beaten down, that are quality instruments, quality companies, just from sheer price action drop and they're starting to bounce. If you want to rebalance your portfolio and all that kind of crap, that's fine. As a trader, I don't care about any of that. I just care about buying high and selling higher. So I'm just in it for the money. I don't think about what happens over the course of a year or 2. Hey, Beryl. And pricing for small cap scans is on the website. Hey, Happy New Year to you too, Eric. Hey, Jay, asking the 3 options people. That would be Larry McMillan, Price Headley, and Tom Sosnov. Those are the 3 aces, the 3 smartest guys I know in the world for options trading. Now, what we want to look at least, for the moving forward into this week, and something that my members will continue to get updated alerts for daily, is if we get the big bounce in their inverse instruments, whether it's SQQQ or my favorite is TVIX with 1-year high volume. By the way, look at the difference. Compare and contrast. If you're looking for pivot plays, look at how much they're voting. The traders, institutional and home traders, and us speculators, we vote with volume. Bum, 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 bum. Epic volume, 1-year high volume in TVIX. I even posted that on the Elite Trader forum yesterday saying, hey, are we at a market top? I usually don't call market tops, but because we have a 1-year high, and here we have the mass effect, the mother of all short squeezes, starting in our heavily shorted VIX instruments. That's why the volume is 1-year high volume and twice the volume of any day in the last 3 months. People, including me, were buying up some TVIX on the bounce. So we may finally have that bounce in TVIX. I've been wrong before, but I scale out when I'm wrong and I scale back in on any sign of bounce because there's a lot of profit potential. So do pay attention to that. I was up $450 even on small under 100 share trade in TVIX yesterday because of the point range. Now I'm uninterested in gold because despite the fact that gold is typically a good defensive hedge, I'd be waiting for Nugget to get north of 37.5. I'm not going to be buying a closing bullish cup between 34 and 37. That's, by the way, that's the worst place to buy an instrument is the upper portion of a bullish cup. This is the left side of the cup. This would be the right side of the cup because that's the exit target for everyone who'd already been in from down here off the pivot. So, you know, if you buy 30.5, 31 and sell 36, you're a happy camper. So it's a 5-point run. So for that reason, and this is for any instrument, you don't want to buy the rightmost side of a cup closure because often it chops or goes down. What you want to do is wait for it to break out to new highs. So I'm not really fascinated with gold this upcoming week. Oil has been surprisingly weak. If you look at UWT as one of the tradable ETFs, UWT's gotten a beat down. So obviously DWT is starting to get a little pep in its step. And that may be a good shot for a ETF small cap bounces DWT somewhere north of 5. And if it gaps up on Monday, make it break the 200 simple moving average line and wait till it gets over, say, 580. So DWT to capitalize on weakness in crude is one way to play our current market from a commodity standpoint as well. Wow, a lot of questions. We've got us some charts to work with. Well, let's see, a question from Deanna. Would I have added to the TVIX at the 40.50 or waited until 41? I was scaling in on the way up, so I'm going to buy new highs in it. The question, are the inverse ETFs or ETNs more risky to stay in beyond a few days? Everything's risky. I don't mind holding them for weeks because I'm waiting for the move. Question from Steve. Hey, Ken, what to do if the market gaps up on Monday and keeps going all day? Just asking worst case scenario to plan ahead. Well, I'm going to scale out of the price that proves a trade wrong. And again, I won't call this a home run. Actually, we're in football season. But a 1st and 10, okay? I'll give myself credit for a 1st and 10 yesterday. The price that would prove a TVIX trade wrong would be a loss of 38.5. So let's say it gaps down to 41 and starts to crash on Monday morning. I'll stop out. I usually give this one a little more breathing room because of the volatility. Like I did, I did not stop out of my position wisely yesterday on the gap down because I know that oftentimes the gap recovers. And so my my stop loss is at 37.8, right under the whole number 38. And that's what I'm going to use come Monday. So let's say if the market gaps up and bulls are in charge and there's no more virus fear and earnings are going to be great, or there's a tweet, or the impeachment gets dropped, or whatever, and the market gaps, and this guy gaps down to 40 and starts to crash, I'm in 100 shares, so I'm going to start scaling out. If it gets under that same 37.8, maybe 30 share blocks at a time. So 37.8 at 36.8, 35.8, work out of the trade. What I'm more interested in doing is building a trade on the way up. So let's say it gaps up to 48.5. I'll buy over the next breakout, say over 50.5, and scale in from there. And I'll give specific entry triggers. But this is from yesterday, right? So I was up $708, $707.99, mostly thanks to my TVIX winning trades. But I'm in all three, but much more capital in TVIX than the other ones because the percentage gain potential is much higher. Remember, TVIX had been 800 a share during the beatdown a year ago, so. And it spiked up to as high as 60 a share the night that he bombed the guy in Iran last week or whatever. After market, this guy ran all the way up to 60, then we ran all the way back down. So you buy the dip and sell the rip. I did not sell at 60 because I was hoping it'd keep running up from there. It didn't, and it came back down. So lock and load and reinitialize positions. But there's money to be made in charts like this because the range is there. Much smarter instruments to trade than $3 low float crap momentum pump and dump stuff. Hey, Phil. Well, thanks, Bruce. I appreciate that. And the order flow in TVIX. Let's see, any other questions? Oh, it's good to know Wendy's saying the FOMC is on the 28th and announced on the 29th. Okay, that's good to know. That's midweek as well. And hey, Gerald, no, I do not short individual stocks. I just buy inverse ETFs to go up. Hey, Steve, saying you'll miss me at the 2020 Orlando Money Show coming up in a couple weeks. Hey, good news. I did register. I will be speaking for the first time in a couple years. I know I haven't been doing money shows lately. I apologize. The company's been growing. I've got so many new customers, and I'm an army of one. So I work my ass off. I've been remiss in speaking at money show events, but I'm pleased to announce I will be a featured speaker at Money Show Las Vegas coming up this November. So do mark that on the calendar. My first time it'll be 2 or 3 years. I used to speak at money shows every single year in New York and Las Vegas mostly, but I've been remiss because I've just been too busy to travel. But I will be speaking there this November, so do put that on the radar as a featured speaker. And just a quick reminder too, whenever I speak at the Money Show events, 100% of the time I always get a standing room only crowd, and the people out in the hallway and can't get in, and standing at the back of the room, and it gets all crowded, and all that kind of stuff. So show up early. Show up early. Hey, Wendy. No, Andy, I'm not looking at Forex. Now, Forex may start to be interesting on a beatdown in the market. Let's see, I don't have any plans for New York, Mark. I miss the city. I miss Junior's cheesecake, best cheesecake in the world. Hey, Ben, good to hear you'll be there. Hey, Wendy saying Las Vegas, I know why. Bellagio. Of course, I love Bellagio. But I love my traders too. I love you guys and all my colleagues who I deeply value. And the team at Money Show is wonderful people, and I highly recommend that. And the traders I work with are the world's top people that actually know what they're talking about, right? So learn from people and know what they can do to help. Anyway, hope that helps. Let's see what else. Just a friendly reminder, I appreciate y'all's loyalty. If at no other time in history you join my live room, even if you've already trialed it before, if you sign up by tomorrow, that's my deadline for repeat trialers. If you've trialed it last year and no longer with us, or if you trialed it in years past and you're coming back, welcome back home. You can, sorry, my voice is shot, re-register for just $7 for 3 weeks at tradingtheopen.com. So love to see you there next week. We've got a hot market week ahead, and the real fireworks are going to be after next week, after all the earnings releases are out. The real directional. So here's the final real trader's tip is it may be not a trade recommendation, but for learning use only, you may want to consider trading multi-day highs on small share size anytime next week. But because we're going to get a lot of gaps, right? There's going to be major gap price action going on next week because of all the earnings. Of course, every time earnings are released, that produces a gap up or down. We'll see what earnings do with a lot of momentum growth, high caps, large cap stocks are reporting next week. So that will kind of set the tone for the market and be kind of the final data set and the FOMC, I guess, too, that'll drive the market up or down after next week. So next week, start nibbling away at your positions. And of course, day trading, we day trade daily, but for swing traders, start nibbling at your positions next week, but wait until the week after next, after earnings are all out of the way and clear before putting on size. That's my bye coverage for this week. So y'all take care and thanks for being here. I appreciate it. I'm going to wrap because I've got swing scans coming up next for all my swing scans and all access members. Look forward to working with y'all and I hope that solves part of the puzzle and puts you on the right side of your trades. Hey, thanks, Long. Appreciate it. Saying Happy New Year to you and your family. You too. And thanks for the presentation. You're welcome, sir. Hey, Mike. Fellow Colorado, how you doing? First time likely to be headed out of town. Okay. Oh, thanks, Steve. Appreciate it. Yeah. Happy birthday. Yeah, I just turned 56 a week ago. Getting older. Hopefully a bit wiser. And hopefully I can share with you some success strategies for making the most of our markets moving forward. Take care, and I'll see y'all next week. Bye for now. And join me. Go to www.tradingtheopen.com. You're welcome to register. It's only $7 for 3 weeks of training. If you want to stick around and do nothing, and you'll get automatically enrolled at the $97 a month rate, which is a bargain for over 30 hours of training per month. Or if, that's it, it's just $7. So what a deal. Anyway, take care. See you guys next time. Bye for now.